What are the differences between build to rent and build to sell? Well, the traditional Australian development model has been build to sell. And that is where the developer acquires the land, builds a building, offers the individual apartments or houses for sale to individual investors, owner-occupiers, and whoever wants to buy them. They will not normally hold any of the stock back. So that's the difference with build to rent. Build to rent is a completely different model. None of the individual, let's call it apartments in this particular example, none of the apartments will be offered for private individual sale to anybody. The whole development will be maintained and put under a management structure for rental, with the idea being to capitalize on lower costs through bulk volume, through professional management, and to maximize the rental returns for a potential asset sale. So most developers, if they do build to rent, will probably hold and look to hold for 5, 10, 20 years. We used an example in an earlier video of build to rent in Hong Kong, where the developers hold for years, if not decades, where they just never intend to sell. And that model has been very, very successful all around the world, but it is absolutely brand new in Australia. So with buyers on build to sell, previously they would buy their own apartment, but they would pay a myriad of taxes, and it's changed a lot in the last 2 years. There's been a myriad of new taxes for individual buyers, stamp duties, foreign investors tax, vacancy tax, land taxes, a lot of different taxes. But if they want to invest in build to rent with a developer, then all of these taxes will not apply. So there is more on that as we go along, but the main difference is build to rent is just a rental model, and then either hold and collect the rent or hold and sell and hopefully make a windfall gain. Build to sell is where a developer will simply sell every single apartment off, and been very, very profitable, I have to say, for the developers in the past doing that. They've made very good profits, particularly in a hot market. With the changing market, this model may not work for a lot of developers, so a number of projects will be changed and from potential residential to build to rent, and they may never sell those in the future. So it's going to have few implications too, because a lot of investors who would like to perhaps buy their own property are going to be limited in the amount of supply. So they will be looking for other investment opportunities, and build to rent could offer a good investment opportunity for individuals.